And that is quite literally, you guys, the US government is a Chad in finance who drives a 6 Series Beamer and wears a Rolex and the nicest suits and is always at Soho House. But what you don't know is that he's actually massively in debt. And if he were to lose his job, he would have to file bankruptcy. Welcome to the Cash Flow Chronicles. I'm your host, Johnny Cattani, and the founder of Cattani Capital Group. For the last 2 years, I've been studying alternative assets and now help solve the problem of creating passive cash flow for creators, influencers, and busy professionals by bringing you 5 episodes a week of easy to understand education in the world of passive investing. What's up, guys? Welcome to another episode of the Cash Flow Chronicles. I'm your host, Johnny Cattani, and happy May. Holy cow, April went by in a flash. If you're like me, you're wondering what the heck happened, but we are on our way towards summer, which is amazing. Finally getting some gorgeous 80-degree weather here in Salt Lake City. I hope everyone had an amazing weekend. I know that it's officially hump day and we're moving on to the next weekend, but I'm recording this and I hope you guys had a good last weekend, and I hope you have big plans this weekend. Last weekend we were in Moab, did some camping, which was absolutely amazing. I mean, went out onto just some BLM land out in the middle of nowhere, fully off the grid. It was amazing. Me, Sam, and the 2 dogs, much needed. And then this weekend we are headed to Denver. So if you're in Denver, hit me up. Love to say hi. Mixing a little business with pleasure. Gonna meet, really they're friends, but we're all in the industry, but they're honestly friends first. So meeting with some friends and then going to a Red Rocks concert. If you guys follow me, you know that I'm a huge EDM fan. So we are going to Ganja White Nights Wobble Rocks. It's a 2-day show, Saturday and Sunday at Red Rocks Amphitheater. If you are fans, if you like music, which I'm yet to find anyone who doesn't like music, but perhaps that person exists. However, it doesn't matter what kind of music you like. I promise that kind of music has a show at Red Rocks at some point. If you have not been to Red Rocks, do yourself a favor. It is my favorite venue that I've ever been to in the world. I haven't been to a lot of them, so I don't want to sound like I'm some world traveler. I've been to all these venues, but it's absolutely incredible. I mean, the views, the acoustics, the vibes. I mean, a sold out show at Red Rocks is, I mean, bar none, honestly. It's absolutely amazing. So that's our plan, and we're very, very excited. But we have a lot to get to today, you guys. So first, if you're not already subscribed to my list, you need to subscribe because big things are coming. We got the oil and gas deal, which I talked about a couple weeks ago. You can go listen to that episode. That will also be, once I kind of finalize things, I'm still in the due diligence phase, but once things are finalized, I will be sending it out to my list. So you'll want to be a part of that because that is the only place that you will get access and be able to invest. So keep that in mind. You can go to investwithcattani.com is one, or they both go to the same place, thecashflowchronicles.com. Same name as the podcast, super easy to remember, thecashflowchronicles.com. Go there, sign up for the list. Also, that list, those 2 lists, will get a video series coming very, very soon. I'm very excited about this video series for new investors. It's taken me longer than I anticipated to make, admittedly, but it's going to be good. And I'm very, very excited. And you'll really, once you like go through the series and all of the readings and the checklists and all the videos, of course, everything that goes with it, you'll really have a solid foundation for your first investment, or at least have an idea of which direction you want to go, right? So that's what I'm going for. I really want you guys to have a direction for which way you want to go in terms of your investment thesis. And you can listen to Monday's episode with Seth Bradley. Seth and I break down really the best way to determine your investment thesis, your risk tolerance, and all the things that go with it. And oh, by the way, we talk about some really, really important things for passive investors. So go listen to that episode from Monday. Also, you may now realize that we are no longer a daily podcast. That's right. 3 days a week now, Monday, Wednesday, Friday. Monday will be a interview for the time being until I run out of interviews. I am booked for the month. So honestly, I believe that Monday interviews will probably go through June at this rate. And then Wednesdays will be a solo episode like you're listening to now. And then Friday follow-up will always be there. That will never go away. That is, of course, a solo episode, always has been. But, last week we talked about the Bed Bath & Beyond bankruptcy and how it relates to commercial real estate. So you never know what we're going to talk about on Friday follow-up. But, drumroll please, it is literally May 3rd as you're listening to this, and there has been so much action economically. So first thing we have to get to, First Republic Bank has officially failed. Now, it wasn't as bad. Well, this is now officially the second largest behind Washington Mutual back in 2008. And guess who came to the rescue? Again, just like they did for Washington Mutual. You guessed it, JP Morgan Chase. Jamie Dimon and his squad have come to the rescue once again. They are taking on. So the way that it's going to work is they're going to assume $92 billion in deposits, insured and uninsured. It's buying most of the bank's assets, $173 billion in loans and $30 billion in securities. The FDIC is going to share in some of those losses, obviously, up to $250,000. They will cover, however much that ends up being. Oh, looks like, according to Wall Street Journal, that will end up being a hit of about $13 billion. And on top of that, JP Morgan's also going to receive $50 billion in financing from the FDIC. Oh man, the behemoth just keeps on getting bigger, doesn't it? And there were a lot of banks bidding on this, but JP Morgan won it out again, and they continue to grow. A lot of very wealthy people, a lot of very wealthy. I know a lot of people in the real estate industry. They were very real estate friendly, especially for funds. They were very fund friendly. So a lot of very wealthy people banked there, which is why JP Morgan bid so hard for it, because they want those wealthy. They are really, really trying to peg themselves as the world leader for wealth management. And so there you have it. So that was kind of the final bank that was on the chopping block. And and if you've been paying attention, and it's been mainstream, but they basically lost 99% of their stock value and then eventually obviously went to zero. So, you've got, you've got what the experts are saying, a crisis that is now over, or from what we're supposed to believe is now over. There's no more banks struggling this poorly. I really like, the biggest thing is it feels like it feels like management issues, and they're finally being brought to light as in terms of poor mismanagement. Now there's some regulation issues as well. It was a regional bank that fell into kind of the mid-sized bank range, which had certain regulations, and those regulations are set to change because they were too lackadaisical, obviously, as we're seeing. So it is something to keep an eye on. It's very, very interesting because they tried to save themselves. They got basically the biggest thing they ran into is there was 100 back in when Silicon Valley Bank was struggling and everything was happening. There was a run on First Republic for 100 billion. So, that's just casual. And then, they got let's see, they had an $11 billion, $30 billion. So a bunch of banks got together and lended them 30 billion. That still didn't cover it. They basically went from a $115 stock price to $4 in 7 weeks. I mean, that's just so crazy. Now, the bank itself will still exist. That's not true. The bank will not exist. It will be consumed. Well, it will now become JP Morgan, but the employees will stay if they want, is what they're saying. Really, you guys, these acquisitions are so massive that it will be 6 months before the paperwork is even completed. And then they'll reassess and determine, who's going to stay, what positions they need, what positions they don't need. So still a lot of mess to clean up. But from what we've seen, this was the final bank on the chopping block. And from what we're being told, is it should be over. So I don't know. It's something to keep an eye on. You guys know I'll always keep an eye on it. And I'll let you know. So really, it's really it's really a huge, it's a concern, right? And we're going to get to more concerns. Unfortunately, you guys, there's a bit of a doomsday vibe on this podcast today. So just want to let you know as we move on to the next story. So we'll keep an eye, but as far as we can see, it looks like the banks are going to be fine. And, if not, the government and JP Morgan will come and rescue them. And we're all supposed to just continue on our day like it's all fine, but caused a lot of issues for a lot of people. It's going to cause more ripples in the debt department because they're not going to take on all of their debt, right? So that's, it's going to, in kind of the treasuries and the long-term stuff, there's a lot of stuff that's going to be sold, and it's going to put a lot of supply out there, and it's going to bring the prices down even more. So we'll keep an eye on it. We'll see. A lot of regulations to change, though, because this is a big deal. So I imagine the banking committee eventually will get to this and determine what needs to be changed. So on that's a perfect segue. Big thing coming from the FDIC. They're pushing for they're going to reduce the risk of bank runs. So I'll just read this first line here. Lawmakers could reduce the risk of bank runs by significantly raising deposit insurance protection for accounts used for payroll and other business payments, the FDIC said in a report on Monday. Yeah, so a targeted move to make sure businesses can get back money intended for such payments if a bank fail was the best of three options the FDIC considered for overhauling the deposit insurance. Okay, so and it does look like they are considering, so it's the possibility of establishing unlimited insurance for every bank account, or generally maintaining the current framework of insuring only a set amount of deposits, but potentially raising the $250,000 cap. So we could see that raised, but what it looks like they're really pushing for is for business accounts, especially those attributed to payroll and things like that, to increase the coverage, which makes a ton of sense. I mean, think about what that would solve in terms of bank runs, right? Because really what the bank runs were is it's not your everyday people going there to get their couple thousand, or, 10, 20, 30, 40,000, couple 100,000. I mean, if it's over 250,000, then they're probably making moves. But think about a payroll, think about a company, 50 employees, and they all make, $80,000 to $150,000. Just say they all made $100,000. That's what is that, $5 million? Or is that, yeah, that's $5 million. So that's that right there. If you got $5 million, that's not FDIC insured, right? But that's your payroll account. So of course you're going to go pull that from the bank and move it to a different bank, perhaps spread it out, right? So then you got to pull payroll from different bank accounts. Cause a lot of issues for a lot of businesses, I would imagine, that have employees. This is a moment I'm grateful that it's just me still right now, despite my desire to have a big, sprawling private equity firm that we are on track for, and we're headed that way. But I am grateful that people aren't relying on me, and I'm not relying on a bank like this to cover payroll. So I love this idea, because you're really going to eliminate I shouldn't say eliminate bank runs, but you're really going to mitigate bank runs, because these are the accounts that had to go get their money out to make sure they could pay people on time, right? Because the fallout from that is it's catastrophic, right? I mean, you got people who live paycheck to paycheck, have to put food on the table. I mean, a lot of issues arise. So I really, really like that. So that's a regulation to pay attention to. The next thing is that I want to get to is Fed rate is coming. So looks like another 25-point basis hike coming today, actually, as you guys are listening to this. But and I'll talk about this on Fridays, on the Friday follow-up after we know what happened. It looks like a 25-point rate hike and then a pause, which I said this a couple of weeks ago, you guys. I knew this was coming. I predicted this. It wasn't that hard to predict, because it's literally what they've been talking about. So by no means do I want to say like I made this prediction. It's what they've been talking about. Even for the last year, it feels like this is kind of what was coming. So the pause will be with an asterisk, because it's really going to depend if, they can bring inflation down or not. If they can't bring it down, now the pause, we'll see. I imagine they'll pause, we'll see, but there's still strong growth, you guys. And until things slow down, that's all they can do. So, it's really something to keep an eye on. So we'll kind of see what they do in terms of what the pause looks like. We'll know more on Wednesday after they meet. Obviously, this, another bank failure is going to weigh on it. I really, really think they're going to consider the pause and see if, by this final hike, if it can really slow things down. Now, remember, things like real estate and a lot of these stats are kind of slow moving. So it takes time for these effects to take shape, right? So, we're really not going to know if things are slowing down really till Q3, Q4. That's when I would expect them to really determine whether or not they're going to keep raising, or if they're done raising, is in their Q3 meeting. Because raising rates and then getting each month's, CPI report, it's like, okay, sure, things are slowing down, but it takes time. Like, there's still deals in the real estate world getting done that were engaged 2-3 months ago, and rates were locked in from back then. So it takes time for a lot of these things to catch up. So it'll be something to keep an eye on moving forward. And I will absolutely be keeping an eye on it and reporting it for you as these times come. So what did you guys think of the show? Not sure what to think about the economy moving forward. Oh my gosh, I almost forgot one of the biggest doom and gloom parts there is, you guys. I'm really sorry to have to end on this note, but the US government literally could default as soon as June 1st if our debt ceiling is not increased. What does that mean? That means that if a resolution is not reached to raise the debt ceiling, that the country will default. The literal country that backs treasuries, which when I was getting my Series 7, which this is why I told you guys when I got my Series 7, they say that it's guaranteed by the US government because it's backed by the US government. But I know there's no guarantees in investing, because if they default, they could miss on treasury payments. You're talking treasury payments, like debt payments. So that's their debt. So not being able to cover their debt, not being able to cover Medicare, not being able to cover debts to other countries, to soldiers, to the military, to defense contracts. I mean, you guys, we're talking a catastrophic collapse of the US government. Oh, I really hate to end on that note, but it's something we're going to have to keep an eye on it. Now, you know, it's caused a lot of issues. We look at 2011 when they, in the 11th hour, decided to raise it. It caused a lot of issues in terms of, you know, what it caused a lot of issues in banking and in debt. I mean, there are a lot of things that we have to keep an eye on here when it comes to this. And, you know, there are other things like, you know, you talk about paycheck to paycheck. One option they have is where they basically cover daily, because the way that it works is they rely on tax money, right? Now, we think about how much money comes in taxes. They're obviously spending way more. They're basically, the US government is like that kid who's flexing all the time, but in reality, he's massively in debt because he wants to drive the nice car and have the nice house, throw the nicest parties and wear the nicest watch. But in reality, behind the scenes, he's in massive credit card debt and quite literally couldn't lose his job or any of his income, or else he would have to file bankruptcy. And that is quite literally, you guys, the US government is a Chad in finance who drives a 6 Series Beamer and wears a Rolex and the nicest suits and is always at Soho House. But what you don't know is that he's actually massively in debt. And if he were to lose his job, he would have to file bankruptcy. So that's what's happening. That's what the US government is right now. And unless this is raised, we're not really sure what we can do. You know, it's something to keep an eye on as we move forward. It will cause mayhem in the markets, obviously. So we're just gonna have to keep an eye on it. Now, the issue is if we did go into default, it would be one of those things where everyone would regret it instantly. Like overnight, the entire country would collapse, and we're talking even like a global collapse in terms of our stand, like where we stand globally. We're already not doing well. A lot of countries no longer want to be us, want to be like us. You know, we're Chad, and you know, people get tired of listening to Chad flex and tell how everyone should be investing in crypto, and it's not going well. No offense to any Chads out there. I love you guys very well, but you know, the US government's a bit of a Chad right now. And so markets would be in mayhem, and it would literally be an instant regret. Like the Republicans would do it, you know, would try to be like, oh, look what the Democrats failed to do, but the country would go into such turmoil that it wouldn't even feel good, you know? And so that's where we're at right now, you guys. So we'll keep an eye on that. We have a whole month. They have a whole month to kind of determine. I know that it's top priority right now for a lot of the Senate and Congress. So we'll kind of keep an eye. I know something was passed by Congress and immediately failed in the Senate. So we're going to have to reach a compromise somewhere. And I really hope it's reached, because we really don't want to see this country go into a deep, dark disaster pit. But unfortunately, that's the direction that we're heading unless things change. So there you guys have it. How are you feeling? Thoughts and feelings. What do you think? Questions, comments, concerns? Reach out to me if you want to talk about this stuff. you want to cry, I'm here, shoulder to cry on. What does this mean as an investor? Well, it means that, lending will be very challenging, could be very challenging, which means transaction volume will continue to stay low. It means going out and taking on personal debt will be far more challenging. It means a lot of things, you guys, as an investor. But what I will tell you is after 08, in that period, 08 to 12, when the country, a lot of people made money. So I want to end on this note, you guys. Opportunity is still out there. There's still opportunity. It might not be big, bright, and shiny and obvious, but you got to pay attention, like I've been saying. And if your head is down and you're paying attention to whatever asset class or market or whatever it is you like to invest in, your opportunities are presenting themselves. And it's important as an investor, take advantage of those opportunities when you see them. That is why you should go and listen to the episode on Monday with Seth Bradley to really help determine what your risk tolerance is and what your investment thesis is. So then you can start putting that to work so that when the opportunities come, you can invest. And in 10 years, we're going to be rich. And I'm going to be doing a Wednesday show in 10 years talking about this time and the opportunities that we all had to invest in and how well we did. And I'm going to be like, all right, guys, that's my show. Now I'm going to go jump on the PJ and I'm out of here. Right? So, but that can only come if you understand that while there's all this turmoil and it feels like doomsday, there will still be opportunity. So remember that. Okay, guys, I leave you with that note. Thank you as always for listening. Don't forget, go to thecashflowchronicles.com, thecashflowchronicles.com, same name as the podcast, and subscribe to my list. A lot of big things coming. I'm very, very excited. I hope you guys had a great hump day. Have a great hump day. Have the best day. I will talk to you on Friday. See you guys. Thank you again for tuning in. Who do you know that wants more cash flow? Share this episode with them so you can grow your cash flow together. If you enjoyed the show, make sure you're subscribed on your platform of choice so you never miss a new episode. Go to CattaniCapitalGroup.com to learn more.